What's up, everybody? Welcome to another episode of SuperStonks. It's Friday, right before the weekend, and I'm presenting you a real shocker episode. Some people will most likely be outraged because I'm gonna compare two stocks that at the first glance don't have that much in common, but if you go into the details, you will figure out what I mean when I say those stocks have many similarities. And what I'm talking about is the MOMO stock, and I will compare it to the GameStop stock. So, what do these two companies have in common? Well, they share totally different business models, right? But I think they have some essential similarities when it comes to what makes the stock or the company work, what creates value, and how the past events have influenced the prices of these stocks. So, I want to go into the details in quite a bit. You can't live without the disclaimer. Here it is. I'm not an investment professional. I do not give professional stock advice. Everything I say is just for educational purposes. Do your own homework, make your own decisions, challenge whatever I say. This is just my thoughts on certain events, stocks, and topics. Look at those two charts, right? I mean, they look pretty similar. One of them is the MOMO chart and the other one is the GameStop chart. Let's solve the riddle. Here we go. This is the MOMO chart. This is the GameStop chart. Of course, up here you have the short squeeze. And what I just want to show you is that the charts look pretty similar over a comparable period of time. That is because GameStop is definitely a cyclical stock, largely dependent on the console cycles. When does a new console come out? How many games you sell? Of course, when you got new consoles, you also sell new games. You sell the latest games. So you have a lot of uptrends followed by a huge downtrend. It's just a cyclical business. On the MOMO stock, well, it's not that you are waiting for new products to come out, but it has something to do with the product cycle of MOMO Inc.'s two main products, right? The MOMO app and the 1010 app. So what we have is basically a business cycle on the MOMO side versus a product cycle on the GameStop side. What the two companies also have in common is that their stock price is hugely influenced by the earnings and their growth. If there's no growth and the earnings are weak, the stock price goes down. The stock price will always be determined by earnings, growth, revenue, basically always the fundamentals, right? And if they are bad or they are declining, the stock price goes down. If they are good and they are improving, the stock price goes up. Simple as that. And I think it's the case with these two stocks. Both had bad news along the way and of course had their ups and downs. You had the best growth story for MOMO in the early years. So massive user growth, revenue growth, huge increase in the stock price. Then it went down, it went up again. You had some bad news up here. You can also watch the details in one of my last videos where I do the in-depth analysis of the MOMO stock. So here you go. It was quite a controversial stock in the past year. So you had these huge swings. And at the moment, the stock price is where it was 5 years ago. So if you bought the share 5 years ago and you held it until now, for you, nothing has changed. For the business, a lot has changed, right? But that's just what you have to deal with when you're in the stock market. MOMO might have huge tailwinds in the near future. GameStop, it seems, has capitalized very strongly on the expected tailwinds and also on their improved situation, like the huge increase in online sales, the new console cycle, the improved holiday sales over the New Year's, and so on and so on. So everything's priced in there already. The stock price increased massively. Both of the stocks, I mean, if you followed the GameStop story, this stock was hated. It was hated so much, it was shorted so much. There was more stocks shorted than were available on the market, right? So people just hated the stock. At the MOMO, I think for a couple of reasons, it's a Chinese stock. They had some bad news in the past. Fundamentals are not getting any better at the moment. So everybody hates the stock. Everybody sold the stock. So stock price is down. And I think those are huge similarities right here. But also both stocks, GameStop not anymore, MOMO still priced for disappointment because people just are not sure what might happen in the near future. Does it get back to profitability? Does it go back to growth? Nobody knows. I think we can be very sure about it, but they still have to prove it. Still very positive on the stock, but at the moment priced for disappointment. Also, both companies share a huge user base that can be monetized, right? So GameStop had their Power Up members. I think it was 60 million people in that community, and they have to figure out how they can further monetize on that community. And it's basically the same with MOMO. They have this huge user base that are creating revenue that make the MOMO app their cash cow. And now they have to figure out how they can monetize the 1010 app. So huge user base creating revenue can be monetized, but they need to figure out the best way. They have strong cash reserves. I think in the mid of 2020, GameStop traded for a market cap of 250 or 300 million. They had $300 million in cash in the balance sheet. MOMO, somewhat similar at the moment, 2.9 billion market cap and around about 1.3 billion dollars in cash. That's just a huge amount of cash. You need strong fundamentals for a downside protection. So then when you get into the stock, you want to know how low can it go. And if you have a lot of cash, if you have low debt, then you can, with very, very simple statistics, figure out what might be the lowest price, right? Quite the same situation for GameStop. When you looked at the market cap and the cash on hands, you didn't even have to come up with a number on what's the lowest stock price. It was 100% sure that they are just worth a lot more than what the stock price was at that time. Return to normal dating in 2021? Well, it still depends. I mean, from what I've heard or what I've read in the news, China is opening up. They are having music festivals. They are opening up water parks. They're just getting back to a normal life, and people are getting vaccinated. So to me, this is somewhat similar to the start of the new console cycle, late 2020. Business is expected to boom again. And there you go. There's a need to improve on a solid foundation. Of course, they had some good times. Now they have bad times. They need to improve on their current situation. There's just a plateau on user growth, on revenue growth, on profitability. So MOMO needs to adapt here and improve here as well. GameStop had the same issues, just on a different field. But as I said, it's about the same mechanics that those two share and which drives the stock price. They have bad news. When you have good news, stock price goes up. When you have bad news, stock price goes down. So MOMO and GameStop had a fair share of both in the last couple of years. And still both are having or have to have a huge turnaround potential. I mean, GameStop is just the blueprint for I guess, successful turnaround. Everything is pointing towards a successful turnaround. You got the activist investor Ryan Cohen. The board has changed. The C-level has changed, right? Online sales are improving and they are adapting to the new situation. MOMO has the same turnaround potential because they have this massive user base and they need to adapt to the new needs of the people that use their app. That's a challenge. I think MOMO is preparing to do some very, very smart things. They are already doing some smart things, as the numbers show. I'm still very positive. What I wanted to show you with this and the previous slide is those two stocks, those two companies, although they are in different categories or branches or industries, they share some fundamental mechanics that I think when you have followed the GameStop story, you might be able to anticipate what can happen to the MOMO stock as well. Of course, I'm not talking about a short squeeze. MOMO does not have a super huge short interest in the stock. We don't talk about a short squeeze here, but we talk about the potential for a turnaround. When I bought GameStop, it was for an average price of what? I think it was $10, $12. And when I sold all of my shares, we were around about, I think it was 35 or something. I just tripled my money, right? And what might happen here is basically the same. At least you can double it. So 2 or 3 bagger, in my opinion. So from a share price right now of $14.20, a fair share price for me is roundabout at 40 to 45. If you look at the GameStop chart here, when you see the new consoles coming out, well, you don't have to be a genius to figure out, okay, there was new business opportunities. GameStop capitalized on it, so the share price went up. You know the GameStop story. If you want to know the GameStop story, just get it somewhere else. I've read it so often, I don't want to tell you because I can't hear it anymore, to be honest. But here we go. Next console cycle, upwards trend, boom, decline, and here, next console cycle, and yeah, we saw the stock price where it went, just way up here. So simple mechanics for GameStop. Of course, they had to adapt when they were declining. I mean, they have continued to close stores massively. They had way too many stores all over pretty small areas. So they need to cut back on that. And they're set up for growth again in the digital space and also cutting costs, cutting staff, getting rid of lease contracts and so on. I don't know if the stock price of about 160 or what is it today? 160, 165. For my taste, I would say the stock is overpriced, but you never know. If we compare the GameStop console cycle or explain the cyclicality of this company and look at the product cycle of the two apps of MOMO, it's actually quite the same. So you come up with a new app. You're in the digital business, right? So you come up with a new app. At first, in the introduction phase, that's basically where you spend money. You don't earn money, you just give away the app for free. You want to grow your user base. Later on, in the growth section, you do both. You are capitalizing on the user base, you are increasing your user base, you're getting into profitability, and that's what MOMO did. So they increased revenues, they increased profitability, they increased the user base. So they had this massive growth in the past years. I think it was from 2017 to 2019. And now they are slightly past the climax here. So no user base and no growing user base, no growing revenues, no growing profitability. But Tantan is still here. So if we look at that, they have two major chances in their favor. Growth of Tantan. If they grow the user base, if they grow the revenues and the profitability, this is a huge boost for the company. Even if MOMO, the MOMO core app stays the same on this level. But they have a second chance here, namely turning around MOMO to profitability and growth again. So if we drag these two apps across the timeline, then we will have double growth potential, right? Here and here. And if it works, then we are set for a huge turnaround, a huge rebound of the stock price to what I think at least pre-pandemic levels or even higher to $40, $45. And there you go, triple your money again. Of course, you need some catalysts. These are not all the catalysts that are out there, but I think that those are the ones with the highest probability. So what I could imagine is that MOMO Inc. is getting a buyout offer, either for the whole company or just for the Tantan app. And I think Puya or YY sold a part of their business to Tencent, when was it, last year or something, for a couple of billions, and just stock price went boom. Second catalyst might be they just go back into the growth area. MAUs are growing, revenues is growing, they get profitable again, and the bottom line also increases. So there's a turnaround potential here. Even if MOMO stays the same and you only focus on Tantan, which is growing and monetizing its user base, the stock price will go up this direction here, this very direction up here. You don't know what the company or the management has up their sleeves. Maybe they have something totally new in store, something strategic. Maybe they acquire another company or they do a merger with another company and just add to their product base. So, you never know what surprises they might come up with. And another catalyst that might be is that's a political thing, and I don't want to rely too much on political factors because you never can tell. The US and the Chinese get along a little better. They ease their differences. I mean, there's a huge interest on both sides that they have functioning capital markets, that they can trade stocks all over the world on the US stock market, on the Chinese stock market. So, of course, the Chinese are a little bit behind to when it comes a modern financial system, modern stock trading system. but they adapt quickly. And once they figure out where their differences are and how they can put them aside, this might also be a huge catalyst for the stock price. So I don't actually have more to tell you about the similarities between those two stocks. I just want to keep it simple. That's maybe you have the same thoughts, maybe you completely disagree. I don't know, I don't care, but to me it's always important to figure out the main drivers. And once I understand how the key business drivers work, it's easier for me to estimate what's a fair stock price, what are catalysts of the stock. I think of myself as a fundamental investor. I do not give a damn about popular stocks. I do really not give a damn about unprofitable stocks, startups, SPACs, whatever. I just want to see good numbers. I want to deal with businesses that have a track record on being profitable with a very simple business model. Not too complex, nothing too fancy, no rocket science. That's where I feel comfortable. That's where I'm in my circle of competence, right? And you want to stay there. So here we go. If you liked the episode, feel free to subscribe. I mean, we are going big, right? 20 subscribers. If you want to join the team, feel free to leave a comment, to subscribe. I'm very happy. As I said, this is not a channel with the intention to grow into the hundreds of thousands. I just want to share some simple ideas on stocks that I find interesting. And so far for today, I'm gonna leave work now. I'm gonna open a cold bottle of beer and I will enjoy my weekend, and I hope you do the same. Take care and see you all soon.